Who doesn't enjoy going out for a good meal? And while sometimes it's great to have the set menu, for something that will really satisfy your specific tastes and preferences, you'll probably need to go a la carte, customizing your meal to your wants and needs. Investing can be like that too, tailoring them to your values and goals. The appeal is simple. Your money doesn't just work for you, it works with you. In this episode of How to Invest by Julia Spare, we're focusing in on Islamic investing. Join us as we discover that just like vegetarian food isn't just for vegetarians, Islamic investing isn't just for Muslims. In general terms, investing into themes that align with your values allows you to fund ideas and industries you believe in. It's a great way to aim for financial returns while also helping shape the kind of world you'd like to live in. We do this all the time through our thematic preferences. And it's the same with Islamic investing, but here it's a bit like having a rule book for playing the investment game, one that focuses on fairness, transparency, and avoiding harm. Rooted in Sharia law, Islamic investing avoids earning interest and avoids harmful industries like alcohol, gambling, or conventional financial services. Rather, it promotes investments that are in line with equitable financial practices, supporting social welfare. The idea is that investments are transparent and all parties involved are treated fairly and justly. There can be no speculation, no unfair gain, and no hoarding of money. Instead of simply investing into a company and earning interest, investors are expected to share risks and rewards with the companies they invest in. And while it comes from Islamic teachings, the principles are universal, making Islamic investing appealing to people of all faiths or none. So, how do you make sure your investments follow Islamic law? Well, investors should work with Sharia advisors to give guidance on the details, but there are several distinctive structures that support Sharia principles while meeting investors' needs. When investing in listed equities, business activities such as alcohol production, conventional financial services, or gambling must be excluded. But more than that, a financial analysis is undertaken to make sure companies are not highly leveraged or hold too much cash or interest-bearing securities on their balance sheet. In fixed income, investment certificates called sukuk are used. They work in a similar way to bonds, but instead of earning interest, which is not permitted in Islamic investing, investors become part owners of an asset. The person who issued the sukuk then promises to buy back the certificates later at a price with an expected profit. That way, investors can earn money without receiving interest, and their returns are tied to how well the asset performs. Let's get into more detail now, because there are many types of contracts used in Islamic finance. Murabaha is one of the main foundational blocks of Islamic finance. It involves a sale of goods, for example commodities, with an agreed profit markup on the cost price. Murabaha is generally found in financing, deposits, and Islamic structures products. Meanwhile, Mudaraba is an Islamic finance technique similar to a partnership to undertake a profit-sharing business or investment activity. Usually one party provides capital and the other offers expertise and management. Profits are shared according to an agreed ratio, while losses are borne by the investor. A wakala is when one party, the principal, authorizes another, the agent, to act on their behalf in specific matters. Wakala are seen in discretionary portfolio management contracts, in interbank deposits, and some sukuk structures. Finally, musharaka is a joint partnership where all parties contribute capital and share both profits and losses proportionally. While Islamic investing might appeal to a broad spectrum of investors, is it for you? Well, certainly, Islamic investing is attractive because it blends ethical rules with financial discipline, like eating healthily but still enjoying good, tasty food. It focuses on real assets, responsible businesses, and shared risks, which can make portfolios more stable. The menu of Sharia-compliant options is smaller than in conventional finance, and sometimes they can be restricted or even more expensive to access. Rules can also differ slightly depending on where you are, so what's compliant in one country might not be in another, And don't forget, those investing in Islamic finance must make sure they are complying with Sharia law. Using advisors to give guidance is crucial to any Islamic finance activity. Even as more people look for investments that match their values, Islamic finance is finding a bigger place at the global table. Click on the subscribe button for more how to invest tips from Julia Spare.